Welcome back to Investing Talk Podcast.
Today we're looking at Unity software.
As usual, before we start, subscribe, like, and comment to this video to support this show. It really helps us out with the algorithm and gets these insights to more investors like you.
Absolutely. And honestly, today is going to be a fascinating one because we are looking at a company that feels like it has a sort of a split personality.
A split personality. How so?
Well, if you talk to a software developer or a gamer, this company is a titan. I mean, it's the engine running, half the world's mobile games?
Right.
But then you look at the stock chart and, well, it's been a rough ride.
A rough ride is, putting it mildly, it looks more like a crime scene. I've been looking at the volatility on this ticker, and it is nauseating. You get these massive rallies followed by just gut-wrenching drops.
Exactly.
So the mission for this deep dive is pretty clear. We have the financial reports, the analyst notes, the technical charts. We need to figure out if this is a broken business heading for zero, or maybe if this is the bargain of the decade.
That's the question, isn't it? Is the recent 20% drop a falling knife that's going to cut you, or is it a coiled spring just waiting for a catalyst?
I'm skeptical, as always, but I'm willing to be convinced. I mean, most people hear Unity and just think of that logo that pops up when they load a game on their phone. But looking at the research, you're arguing it's a lot more than that.
Oh, it is significantly more than that. And that misconception is really where the opportunity lies. Most people think, video games. But the data shows us a company that is actually a misunderstood powerhouse in ad tech and spatial computing.
Misunderstood is one word for it. But let's look at the numbers. We have to start with the fundamentals, because the story on paper has been, let's just call it messy.
It has been messy, I'll grant you that. But let's look at the base we're building on. We are talking about a company that generated over $2 billion in revenue for 2023.
Okay.
That is not a small speculative startup. That is a massive install base.
Sure, $2 billion is a nice big number, but the stock market pays for the future, not the past. And right now, the immediate hurdle, and this is what the bears are chewing on, is that 2024 is modeled for softness.
It is.
Which is just corporate speak for we aren't growing right now.
It is, but you have to look at why. 2024 was the transition year. It was the year they had to, swallow the bitter pill to set up the recovery for 2025.
Okay.
The thesis for that recovery isn't just hope. It's driven by very specific mechanics.
Yeah.
Ad network stabilization, the rollout of Unity Vector, and the launch of Unity 6.
Okay, let's pause and unpack those, because that sounds like a lot of jargon. Unity 6 and Unity Vector. I get that Unity 6 is the new engine version, better graphics, faster processing, keep the developers happy.
Right.
But Vector, that sounds like a supervillain name. What does it actually do for the bottom line?
It does sound a bit sci-fi, doesn't it? But it's actually the moneymaker. Think of Unity as two businesses sort of glued together. One is create, that's the engine you build games with. The other is grow, that's the ad tech side. Unity Vector is an AI-driven tool for that grow side.
Ad tech. So we're just talking about serving ads in games.
Exactly. But Vector takes it to the next level. It uses AI to optimize user acquisition. Imagine you're a game developer. You want to spend $1 on ads to acquire a player who will spend $2 in your game.
Okay, the golden ratio.
Vector uses Unity's massive data set to find those high-value players more efficiently. It's like a magnet that pulls the exact right spender out of a crowd.
So the argument is, if Vector works, developers make more money, and then they spend more money with Unity.
Precisely. It's a flywheel. And the consensus forecast is calling for high single-digit to low double-digit growth into 2025 and 2026 as this all kicks in.
But getting to that point has been painful. We have to talk about the restructuring. They cut 25% of their workforce. That is a massive reduction.
Huge.
When I see a company slashing a quarter of its staff, I have to ask, is this a company becoming an efficiency machine, or is this just an act of desperation because the cash is drying up?
It's a fair question. Usually, deep cuts like that scream emergency. But if you look at the margins, it really points to efficiency. They are targeting a material expansion in non-GAAP operating margins by 2025.
And you can't get there with a bloated cost structure.
You simply cannot. They had to cut the OPEX to make the business logic work. And the proof is in the cash flow.
Yeah, I have that here. Free cash flow is up 31% year over year in the latest quarter.
Exactly. Desperate companies usually don't grow free cash flow by 30%. Desperate companies burn cash just to keep the lights on.
Right.
That tells me the cuts are working. They are deleveraging their convertible debt. They're being disciplined on R&D. And the balance sheet is stable enough. They aren't bleeding out. They are slimming down.
Okay, so the financial house is arguably in better order than the headlines might suggest.
Right.
But what about the business itself? What stops a developer from just saying, you know what, I'm tired of Unity's drama, I'm moving to Unreal Engine? What is the actual competitive moat here?
The moat is switching costs.
Yeah.
High, painful switching costs.
Right.
Yeah, it's not like switching from an iPhone to an Android where it's, annoying, but you can do it in an afternoon. If you are an indie developer or even a AAA studio, you cannot simply copy-paste your game from Unity to another engine.
Why not? I mean, code is code, isn't it?
Not really. Unity uses C#. Unreal Engine uses C++. The workflows, the asset pipelines, the physics logic, it's all completely different.
So you have to rebuild everything.
You'd have to rewrite your entire code base. You'd have to retrain your entire staff. It would cost millions of dollars and months, maybe years of lost time. Once you're in the Unity ecosystem, you are sticky.
Sticky is good for investors. That means recurring revenue.
Very good. But the moat is getting wider because they're expanding beyond gaming. This is the part that really excites me. They are moving into AEC architecture, engineering, and construction. They're in automotive, they're in energy.
This is the digital twins narrative, right?
Yeah.
I keep seeing that buzzword everywhere.
Precisely. They have a cloud partnership with Microsoft Azure for digital twins. So imagine a car company like BMW or Mercedes. Instead of building a physical prototype to test aerodynamics.
They just build a virtual one in Unity.
Exactly. A perfect virtual replica that simulates real-world physics. They can crash test a car 1,000 times without scratching a single bumper.
And it costs them a fraction of the price.
A tiny fraction. Or an architect can walk a client through a skyscraper that hasn't even been built yet, changing the sunlight angle in real time. That is Unity industry. And that revenue stream is totally separate from whether the next mobile game is a hit.
Which is a crucial point. It diversifies them away from the fickle nature of the gaming hit cycle. If the gaming market has a bad year, those construction contracts keep paying the bills.
And we can't forget the ad side as a buffer, too. Iron Source Level Play acting as a mediation platform helps developers fill their ad slots. Even if Google AI changes how search works, mobile games still need ads.
And Unity is the toll booth for those ads.
You got it.
All right, so the fundamental story is cleanup on aisle 4 is finished, the store's reopening, and they've added a new hardware section. Let's pivot to the charts and see if the price action agrees with that optimism.
Let's do it. Let's look at the technicals.
It's been a wild ride. The stock closed recently at, $43? That was up about 1.5% on the day.
Yeah.
But zooming out, ouch, it's been a roller coaster.
A total roller coaster. We
Yeah.
saw that massive 100% rally previously where everyone thought, okay, Unity's back, and then boom,
Yeah.
a 20% fall.
Right, the drop to around $36, that sell-off was fierce. It was largely tied to fears over Google, which I know we'll get to. But technically, looking at that drop to 36 and the rebound to nearly 41, what does that tell you?
To me, that just screams oversold. When you have a psychological panic-selling event that drives a stock down 20% in a straight line, and then it starts to grind back up, that is a contrarian setup, meaning the sellers have exhausted themselves. Everyone who wanted to panic sell has already sold.
So you see it as that coiled spring you mentioned earlier.
I do. The stock has been beaten down to that $41, $43 level. If the fundamentals we just discussed, like that ad stabilization, actually materialize, the technical resistance above is pretty weak. It could snap back up very quickly.
There is a lot of noise, though.
That's-
I'm seeing high options volume. I'm seeing gap downs. It's trending as a most-watched stock, which usually means retail traders are fighting over it. It feels crowded.
But that volatility creates the opportunity. The consensus among technical analysts right now is neutral, but that's because of the near-term pressure. If you are a long-term buyer, seeing neutral technicals after a 20% drop is often a signal to start accumulating.
Yeah, you don't want to buy when the technicals are screaming overbought at the top.
Exactly. You want to buy the quiet consolidation at the bottom.
It's basically trading on sentiment right now, which is a
Right.
perfect segue. Let's pivot to the market perception, because this is where things get really, really interesting.
Sentiment is everything for a stock like this.
I'm looking at the quantitative scoring from Alpha Vantage. This is the data that strips away the emotion and just looks at the signal. The newsfeed relevant scores are all over 100.
So the market is paying attention.
Close attention. But what is the sentiment of that news? Is it good or bad?
It's mixed. The weighted sentiment is mildly bearish, like negative 0.01. But if you dig in, there's a specific score of negative 0.0293, and that negativity is almost entirely driven by one thing.
Let me guess. The Google AI threat.
The Google AI threat. And this is where the smart money diverges from the narrative. The retail narrative, the YouTube thumbnails, the headlines, they are all screaming, Google is going to kill Unity.
But the smart money.
They seem to view the Google threat as orthogonal.
Orthogonal. That's a fancy way of saying it doesn't actually matter.
Exactly. It's a parallel issue, not a direct collision. Google's AI tools might help generate assets, but they don't replace the engine that runs the physics, the lighting, the monetization. And look at who is buying.
You're seeing institutional action?
We are seeing significant analyst upgrades despite the fear. BTI'd upgraded to buy with a $60 price target. Piper Sandler's overweight with a $59 target. Wells Fargo is at $54. Freedom Capital initiated a buy around $48.
Those are significant premiums over the current $43 price. I mean, the $60 target is, what, nearly a 40% upside from here?
They are massive upside calls. These analysts know about the Google rumors, they've done the math, they've interviewed developers, and they are saying the stock is worth significantly more than it's trading for today.
And we are seeing hedge fund interest ticking up alongside those upgrades. That usually implies quiet accumulation. The institutions wait for retail to panic, sell on scary headlines, and then they soup up the shares.
That is the classic playbook. Wash out the weak hands, collect the stock, ride the recovery.
However, I have to play the skeptic here. It is my job, after all. We can't just wave away the risks. So let's pivot to the bear case. Because if those analysts are wrong, the downside could be ugly.
Fair enough. What keeps you up at night regarding Unity?
Two things. First, iron source. We talked about it being a buffer, but the performance recently has been weak. Q4 revenue for iron source was down 5% quarter over quarter.
That is a legitimate concern.
Yeah. If ad fill rates lag, or if the ad market softens again, that recovery in 2025 just evaporates. You can't have a recovery if your main monetization engine is sputtering.
No, that's the risk of revenue softness carrying over. If the ad tech stack, specifically that vector tool we talked about, if it doesn't perform, the stock will struggle to break out.
And then there's the elephant in the room. Google. Project Genie.
The rumor mill.
It's a powerful rumor. The fear is that Google is building a generative AI that allows you to create games without an engine. You just type, make me a racing game in the style of Mario Kart into a prompt, and boom, it exists.
Right.
If that happens, Unity's engine becomes obsolete. That rumor alone caused a 20% drop in the stock price.
It's a terrifying narrative, I'll grant you that. The idea of text-to-game is the holy grail of generative AI.
And because of that, you have some bearish forecasts saying we won't see strong growth return until 2028. That's a long time to wait. In this market, 2 years is an eternity.
Okay, but here's my rebuttal to that, and this is crucial. The market is efficient. That fear, that Project Genie narrative, it is already priced in.
You think it's already in the cake?
I do. Why do you think the stock is at $40 and not $80? The market has already discounted the price for that risk. At $36 to $43, you are buying the company as if the Google threat is real and imminent.
Okay.
So if it turns out to be exaggerated, which the smart money seems to think it is, the re-rating higher will be violent.
That's the definition of asymmetric risk.
Sure.
You're betting the disaster won't happen.
Exactly. And let's look at the reality of game development. Creating a static image or a video with AI is one thing. Creating a fully interactive multiplayer environment that runs on iOS, Android, PC, and console with real-time physics, hit detection, and monetization plumbing.
That's a whole different level of complexity.
It's a massive engineering challenge. Google isn't solving that plumbing with Project Genie. Unity owns the plumbing.
So the argument is that AI might make it easier to make the pretty pictures, but you still need the engine to make it a game.
Correct. In fact, AI might be a tailwind. If AI makes it easier to create assets, more people will try to make games. And what will they need to assemble those assets?
Unity.
Unity.
Okay, so we have the bull case, we have the bear case. Let's pivot to the final verdict. We need to give the listeners a score and a plan.
Right now, all eyes are on the calendar. February 11th, 2026. That is the Q4 earnings date.
That's the big day. What are we watching for?
We need to see shrinking gap losses. We need to see that they are stopping the bleeding. But specifically, I want to see stabilization in the growth segment. I want to see Unity Vector usage up. If they can show a 15% quarter-over-quarter increase in Vector adoption, That proves the thesis.
So February 11th is the binary event, the moment of truth.
It is. And based on everything we've discussed, the cash flow improvements, the product roadmap, the oversold technicals, I am giving this a bullish score of 8 out of 10.
8 out of 10. That is confident.
It is. Here is the final thesis. Unity has a real-time 3D moat that is incredibly hard to cross. They have new AI ad tools in Vector that are launching right as the mobile ad market is hitting a tailwind.
And the macro environment helps too, right, with rate cuts?
A huge help. The mobile app ad market is healthy and growing. Plus, with potential rate cuts on the horizon, high-growth tech stocks with built-in monetization features usually benefit the most.
So how do you play it?
I think it's a contrarian smart money play. I view this as a swing trade opportunity into the earnings print. You buy the fear now, wait for the earnings to confirm the stabilization, and you catch that pop.
And then?
Then you hold a core position for a multi-year timeline to catch the enterprise and ad ramp.
So trade the earnings, hold for the 2026 recovery. I have to say, the smart money buying, while the headlines scream about Google, is a compelling narrative. It's always scary to buy when everyone else is selling.
But that's usually where the money is made.
That's investing 101. Be greedy when others are fearful.
Mm-hmm.
Well, I want to know if our listeners are fearful. What's your take on the Google threat? Is Project Genie going to kill Unity, or is it just a ghost story? Let us know in the comments.
I am definitely reading those comments today.
As always, subscribe, like, and comment to this video to support the show. We'll see you in the next deep dive.
Thanks, everyone.